Welcome back to Fredtong Capital. Bitcoin is once again testing a critical support zone as selling pressure continues across both crypto and traditional financial markets. Institutional investors have pulled hundreds of millions of dollars from Bitcoin ETFs. Ethereum is fighting to defend a major support level, and several leading altcoins are approaching key technical inflection points. In today's market briefing, we'll break down Bitcoin, Ethereum, XRP, Solana, Chainlink, ETF flows, and the key levels traders should be watching over the coming days. Let's get started. Market news. Charles Schwab launches crypto trading. One of the largest financial institutions in the United States has officially entered the cryptocurrency market. Charles Schwab has launched crypto trading services for retail clients, marking another step toward broader adoption of digital assets within traditional finance. While short-term sentiment remains weak, continued participation from major financial institutions highlights the growing integration between crypto and traditional markets. ETF flows remain negative. Institutional flows remain under pressure. Over the latest reporting period, Bitcoin ETFs recorded approximately $469 million in net outflows. Ethereum ETFs also experienced outflows of roughly $30 million. XRP was one of the few assets to record positive inflows, attracting just over $2 million. Persistent ETF outflows suggest that institutional sentiment remains cautious as investors continue reducing risk exposure. Bitcoin market analysis. Now let's turn our attention to Bitcoin. Bitcoin has fallen back toward one of the most important support zones on the chart. The market is currently testing the area between $59,000 and $60,000, a level that has repeatedly acted as support in recent weeks. From a technical perspective, the biggest question is whether buyers can successfully defend this region. A confirmed breakdown below support could trigger another wave of downside pressure, with the next major target located near $54,000. At the same time, several momentum indicators continue to suggest that a bullish divergence may be developing across higher time frames. While this signal is not yet confirmed, it could potentially support a larger recovery later this year if market conditions begin to stabilize. Key levels to watch. The most important support zone remains between $59,000 and $60,000. If that area fails to hold, traders may begin focusing on the $54,000 region as the next significant downside target. On the upside, Bitcoin would first need to reclaim the $62,000 level before buyers can begin discussing a broader recovery. For now, these remain the critical levels defining short-term market direction. Altcoin analysis. Ethereum. Ethereum continues to trade around a major long-term support zone between $1,500 and $1,600. If Ethereum loses this support area and fails to recover above it, analysts are watching the $1,100 to $1,200 region as a potential downside target. However, RSI data is beginning to show signs of potential bullish divergence, suggesting that a short-term relief rally cannot be ruled out. XRP. XRP has broken below the important $1.13 support level. The next major support zone sits between 90 cents and $1. If XRP loses that region as well, the market could eventually begin focusing on the 70-cent area as a longer-term downside target. Solana. Solana remains one of the more resilient large-cap altcoins. A bullish divergence is still active on higher time frames, although strong resistance remains near $75. In the short term, support is located between $61 and $63, while resistance sits near $68. Chainlink. Chainlink is approaching a critical technical moment. The asset is currently attempting to hold support near $7. If support breaks and bearish momentum accelerates, the next major downside zone could emerge between $5 and $5.50. Market outlook. Looking ahead, Bitcoin's reaction around the $59,000 to $60,000 support region will likely determine market direction over the next several trading sessions. A successful defense could support a recovery toward higher resistance levels and improve sentiment across the broader crypto market. However, if support fails, traders should be prepared for increased volatility and the possibility of a move toward the mid-$50,000 region. For long-term investors, the market is beginning to approach areas historically associated with accumulation opportunities. For short-term traders, risk management remains essential as volatility continues to rise. Closing, that's today's crypto market update from Fredtong Capital. If you found this analysis helpful, be sure to subscribe and turn on notifications so you never miss our daily coverage of Bitcoin, cryptocurrencies, macroeconomic developments, and global financial markets. Thank you for watching, and we'll see you in the next market briefing.